Alright, what's going on, clean trading family? So, this is a video I'm making Tuesday night. We just had the first session of the week. Tomorrow I am going to be going live with you guys in the afternoon. Tomorrow morning, though, I do have to take my girlfriend to work, so expect me to be absent in the morning. That's why I'm going to make a little bit of a prep for you guys tonight. We're going to clean up some charts. I'll share them all with you tonight. This is my updated ES chart. I cleaned up some of the levels above as well. We had some choppy levels above and we had some choppy levels down here, but now it's fairly clean. We have some really clean levels. Nice 15-minute level that we actually held right at open today. Let's go to the 15-minute chart to look at this play. I wasn't trading right at open today. I did hit some puts around here on SPX, on Tesla, and on Apple. In this little zone right here, I think I shorted. I caught some of this and I caught some of this. But I wasn't present this morning because I was also helping my girlfriend get to work this morning as well. But let's talk about what happened, because we actually held this 15-minute level very cleanly this morning. So going into open, let's see, we opened on this candle right here. It's a nice dump candle to start the market, to start the open. Let's zoom in actually on the 1-minute chart to check out what happened. So pre-market, first of all, we had a lot of closes above this level pre-market, and last week we actually reclaimed the 21 MA, which was a big step for the bulls in starting another push in the market to reclaim a lot of the levels and price that we lost in the recent dumps. That happened last week. Going into this session over the weekend, we actually got a nice fade back to, not necessarily all the way back to the 21 MA, but a nice fade to set us up for a potential move higher. And not only that, but I had this 15-minute level here before all this happened. So if I was trading right at the open, then I would have definitely loved the fact that, we made a very strong push last week, very strong bullish push. And at the start of this week, over the weekend, we actually got a nice little fade back to right to one of my levels, this very clean 15-minute level. And not only that, but we had a ton of action and price holding above the level. And not only that, but at open. I wouldn't get in right at open just because, this is not necessarily something you want to go long in when you see some major red candles, especially when you zoom out, see the 15-minute chart, and see that we are downtrending into this level. We don't necessarily want to buy directly at open, even though we have a lot of closes above our level. We're not trying to buy right at open because we're downtrending into it. We want that trend to end. Then we want to catch the move higher if we are actually holding this level. So what I would have done is waited to see where we closed. Okay, and if we look at the 1-minute chart, we zoom in, we'll see that right at open we got a lot of selling. Now this is something that I wouldn't have been a part of. I'm not looking to sell into this level that I have. Rather, I would look to, buy the dip at this level. And so we got a lot of selling into it. Let's check out that 8, the time's right here. Let's check out the 8:45 candle. So right here we actually got the close for the 15-minute chart. 8:44 going to 8:45, we closed right here, and we got a 15-minute close under this level. Now this is my first this is the first close after the market opened, and it's actually the first close we got under the level in a while. And so of course, I'm not going long into this close. You could, if you could predict that we were going to bounce here, you could potentially go long there and risk another close under, but that is not a part of my trading repertoire. I'm not looking to buy into a lot of momentum to the downside, especially when we get closes under my levels, because that defeats the purpose of my system. It defeats my edge. My edge comes from where we get closes. If we get another close under, I might even look to short this level down. So what I would have done is wait, get that first close under, then let's see where the next close is. The next close happens. Let's actually go to the day trading indicators. Alright, and let's zoom back in. So as you can see, first of all, if you watched that last video I made, we're holding this 8 EMA all the way down. A lot of momentum coming into the downside, breaking through our level, and then it starts getting choppy here. We break that momentum, we break our 8 EMA indicator, and that's our momentum indicator, so momentum's going to start slowing down, which it does. Alright, and this is what I would like to see if potentially that first close was going to be a fake breakdown. And another good sign is check out our turning point. It's turning from red to dark green. And eventually what we'd like to see is, some green. Give 1 second. Let me zoom out again. Alright, and so let's find where our next close is. Does get a bit choppy here. Let's look for that 9 o'clock candle. So right here, we're selling into this candle right here, but we do get the close above. And this would confirm to me that most likely this close was a fake breakdown. And it's very clean too, because we had a lot of closes above and we fade right into my level. You could expect that a lot of shorts are going to get chopped here. They're going to see a close under this level. A lot of algos are going to get chopped here, and they're going to want to try to keep shorting this name. So the next close being above this level is a great indication to me that we can actually play a bounce here. We can play the fact that our thesis could be that this was a fake breakdown. And so what I would like to do is go long right here at 9 o'clock. We'd go long at the open right there, grab some SPX calls, and I love playing these 15-minute levels on SPX especially, because you don't necessarily need a lot of time to figure out if you're right or wrong. You have 15 minutes to get that close under if you're playing that specific risk, and it'll be clear very soon, if you're going to be right or wrong. So we do end up going down to this low day. It could get a bit sketchy, but if you just follow your plan, I've seen so many plays like this happen. We get closes above, and then right after we get that close above, market makers try to fake a lot of people out. The algos try to fake a lot of people out by immediately, right after we get that close, dumping it under our level. Not only that, but in this case, we actually got down to low a day. So imagine how many people are looking at this and seeing an H. They're seeing an H and they're wanting to short right here, right at low day. They're wanting to get short. And then they just get eaten alive by the market makers, by the algos who are playing off this level and see the 15-minute close here and got long here, taking a little hit early for 10 minutes. And then look at this candle back that just confirms our thesis. Super strong candle. One other thing to note. Look at this turning point. It's red. We should be bleeding here. And the fact that not only are we not bleeding, we're actually going up. Not only are we going up, we're ripping up. Huge bullish signal. And then we get the close above. And then they slow down a bit because they've proved to themselves that we're going to go higher. We got these two closes above. We faked a lot of people out. A lot of people are in short. And they're about to get their faces ripped off. So let's check out these calls and how they would have moved. SPX. I think this is today's expiration. Let me zoom out for a sec. Let's check out the 4170s. Just picking a random number. Let's do 4180s actually. So copy these calls. Our entry would be around 9 o'clock. Let's paste it in here. Let's check how they moved. So we zoom in here. 9 o'clock. Around here. So you know what? These premiums did lose tons of value. So wasn't the easiest play, it looks like. But if you followed your plan, you're still going to make a lot of money. It's just a harder trade to hold. You can get in around 3, around 2.8-ish. It goes all the way down to 1.5. Okay, so you're losing almost half the value of those. and then it runs up to 4.2. So you're getting around close to 50% on these if you want to lock up there. Let's check out if we actually ended up holding the level all day, because if we did, this would be an easy play to, accept the full risk on, and if we are going to dump, just lock it up when we're under our level, because if we're closing under our level, then we're probably not going to go higher, but as long as we're staying above the level, we should be going higher. So let's see what happened actually. So yeah, we got that only close right there, and then from then on we were actually just holding the level for a while. We ended up grinding here. Premiums weren't moving too well until we got this really nice rip. We faded back towards our level, didn't get there yet, and then we ripped higher. This is actually really clean. I probably would have held the whole time until we got this massive rip. I wouldn't have been scared out by this, even if our premiums took a massive hit. I'm still, focusing on my levels, believing in my levels, trusting my thesis that I came into the play with, and let's see, what I could have made. First of all, you could have played that high day break. We zoom in here, although it's not high day yet. High day's up here. So we zoom in here. High day comes around here when we get a lot of momentum to the upside. If you're in here, you caught that high day break. An easy place to lock these SPX would be when we start losing momentum. And what's our momentum indicator? Our 8 EMA. Now let's see when we would have lost momentum. It would have been around here. So around 1107-ish. And let's see what those premiums would have looked like then. Zoom in around here. 1107-ish. So they would have gone to, you would have locked up probably around 5.5, 5.6-ish from our entry around 2.8. Quick math, that's around 100% gain. So that was my favorite play looking back at today that I missed. But let's talk about tomorrow. So we had a nice rip pre-market, or after the close today. That's what I mean. Now we're fading a bit, getting a little bit choppy here. We have a big range for ES. What I expect, we're going to chop here for a little bit. Okay, when we get these big ranges, this is generally when market makers like to chill out. They like to let things squeeze before pushing us in either direction. We have two clear breakout levels. We got this 30-minute level above. If you're a wick trader, you're marking this high day or pre-market high, whenever that was, because that's our next step towards our 30-minute level above. But other than that, honestly, my prediction, we're gonna get down back towards this 15-minute level. Could easily get down to the 21 EMA, the daily 21 EMA. But I'm pretty certain we're gonna get down towards this 15-minute level, and we're gonna try to hold it again. And I expect, another day or two like this, where we get closes above and we make a nice little rip higher. Not a rip, it's a 15-minute level. You can't expect we're going to rip 100 points to this next level. But you can catch some momentum off of it. So that's what I'm going to be looking for tomorrow and Friday. I'm going to look to see if we can get back down towards this level, see if we're holding it above pre-market. If we're actually losing it, we could catch a nice short all the way down to the 21 EMA. But if we're holding it, I'd love to, buy some calls on SPX, take it a little bit higher, lock up fast, see if we can get down again, take it a little bit higher then. And then once we start the push, the really nice push eventually, get back up towards this 30-minute level, we can find some new entries. But I'm probably not going to hold, a 15-minute entry all the way up here, 100 points higher. We did make like I said, we made a massive move last week. You're going to get a lot of people this week who missed last week's move. And they're going to have a lot of FOMO, and they're going to be rushing into calls and puts. They're going to try to short this beast back down, or they're going to try, they got caught up in the FOMO, and they want more to the upside, and they're going to want to try to get up here. But we know that we're playing off of a 15-minute level that is going to take a lot of work to send us higher. And so the most likely option, the most likely outcome, is we're going to chop up here for a little bit, and we're going to chop up here around this level that has proven to be very clean. Look at how clean this is right here. And clean today, we saw on the 1 minute chart, very clean. Got that nice push higher on the 1 minute chart to get the close above right here. Alright, other than that, we can take a look at, let's take a look at how we did, how our 21 MA has been. So go to the daily chart. We can ignore, I used to use all these other indicators, that's why I have them all up. We got the 200, 50, and 15 MA, I believe, SMA, yep. But this is my go-to, the mean, the 21 EMA. As you can see, we've been selling off for the past few months. As you guys know, we finally lost the 21 EMA, and then from then on, we couldn't get back above, and we've just been rejecting it. Could not get it back above, reject, could not even get towards it, reject, and now we're starting to reclaim it. And so from here on, the question is, are we actually going to be able to hold this, or is this a big push up for an eventual huge H later this coming month? So big question to ask yourself. I'm not the type of trader who's going to be taking multiple weeks out predicting what's going to happen. You know, we're going to take it day by day, and it cannot be more simple than these two levels that we have right here. 30 minute, 15 minute. Break this 15 minute, get some closes under. We're getting another tap at the 21 EMA. From there, we could easily rip back higher. But to get higher, we got to break this 30 minute level. Then we got some liquidity levels above. That could be a nice magnet. But to get there, this 30 minute level, I think it's going to be a little bit tough to break. Expect some chop. That's all I'm going to say. Let's move on. We're 17 minutes into this video. Went over the market. I don't want to go over too many names. I did edit the market. I did edit my ES charts, what I'm trying to say. Let's do that quickly for I haven't updated my charts for this week, so let's take a look. Just taking a look at this. Wait, what's today? Let me double check. I didn't double check the POC for this month. Let me make sure it's still down here. And it is. Great. So we have June come tomorrow. We'll get that POC in around a week or 2 weeks in. So we have a lot of price action to get accurate data. But let's take a look at Shop. Shop's been my favorite name this year. We got May's POC right here, officially closing out for the month. I'm gonna mark this. Do I already have it though? I do not. So let me mark this. May POC. I'm going to be focusing on Shop and SPX probably this whole week, so these are the two charts I'll be sharing with you guys tonight. Let me zoom in. Daily level. I'm going to remove that daily level. Not as clean as I thought. Let's go to 30-minute chart. Check out this 30-minute level. Focused. Zoom in. And I like this level. We'll leave that level. It's a nice breakdown level. You know, if we are going to make an H, if the market's going to make an H, we have a perfect level here for Shop to take her lower. Imagine this cloud breaking, 30-minute cloud breaking. We start rolling over. We start losing these levels. We got a lot of price action here before we hit this level. And you can imagine how many people, if we're actually going to make a huge move lower, how many people are just waiting for this low a day to get into some puts. Whereas I have this clean 30-minute level way above that we can catch an extra, 15 points. We can be locking up when a lot of retail traders are getting in. So I really like this level. Let me double check this 1 hour level. It is next to my May POC, so I may just remove it, see if this May POC is a 1 hour level, and just leave it at that. So far, May POC looking like a 1 hour level. It's a little bit messy. One more attempt. Let me give it a 2 hour. Just check it out. Close above. Failed. Close under. Failed. Higher. Multiple closes under. Blah, blah, blah. This is a bit messy. You know what? I'm gonna leave it how it is now, and I'm going to leave this 1 hour level how it is now. And then up above, these are all clean. These have all been checked. We got a couple 15-minute levels above. Those have been my favorites. So, if we're trying to play the same move with shop that we are trying to with ES, then we can expect some sort of pullback towards this MAPOC and this 1 hour level. And then try to take it higher again. So shop today, it's pretty far away from our levels, so you can expect a bit of chop, which kind of happened. Tomorrow and Friday, I'm looking for a pullback towards these levels, see if we can hold above pre-market or lose it and then get back above during the open. Buy some calls on shop. Let's take it higher. Can see 400. If, first of all, look at this pre-market, looks fairly strong. If we're looking at momentum, we could see a nice push come tomorrow morning. Break above this high a day, can catch a lot of momentum, can get us to 400 tomorrow morning. If that happens, I'm going to stay patient, wait for the break above this 415 with the market. And we should be able to catch some nice plays here. But staying patient, like I said, we're talking about what's happening in the market, talking about what retail and what market makers are doing. Market makers made a lot of money this last week. Retail, a lot of people probably have a lot of FOMO from last week. And so you're going to get a lot of retail buying calls and buying puts, trying to catch a piece of the move that could already be finished. So my best advice, expect some chop coming the next 2 days. And just stick to our levels, stick to our plans. Don't try to come up with some crazy lottos. Just stick to levels that you can create nice theses off of. And that's what we have here, these two levels and these levels down below. That being said, I think that's everything I wanted to go over with you guys. Actually, let's double check the squeezes, because I expect a lot of names are going to get a lot of squeezes the next 2 days. So shop has a black 1 hour squeeze. Turning point not looking too great on these higher time frames. I'd prefer if shop did not rip. Tomorrow I'd prefer if we chopped up. I'd prefer if we stay in this range, get a little tighter on the squeeze. Same thing for the 30-minute, and same thing for probably all the others. Yep, 4 hour, 2 hour. Let's squeeze. Let's check ES. In this range right here, 4 hours starting to tighten up, which is a good sign. Let's get that coming in more. 2 hour. Once again, this will probably be a bit tighter come the open. Maybe we'll get a red squeeze. Everything's looking good. Everything's looking like we're trying to squeeze a little bit more. 1 hour chart, same thing. Still fairly wide compared to something like this, but it looks like we're coming in tighter, and we got a red squeeze already. Looking for that golden. Lastly, 30-minute. Fairly clean. Can easily get tighter come tomorrow morning. Alright, that being said, I'm going to leave you guys on that. Nice little prep. I'll see you guys tomorrow in the afternoon. I'll give you guys an update on what time I'll be going live, talking about the market, talking about some end of day plays tomorrow. Hope you guys have a good night, and I'll see you then. Bye bye.